It didn't break the news, it didn't trend on social media, and most people didn't even notice. But something quiet just happened. Warren Buffett reduced exposure. No panic, no press conference, no dramatic exit, just a subtle shift. And if you're paying attention, this kind of move tells you more about the market than any loud headline ever could. Stay with me, because by the end of this video, you'll understand why Buffett's quiet moves matter more than noisy ones, what smart money is preparing for, and how long-term investors should actually think right now. Most investors look for action. Buffett looks for signals, and signals are rarely loud. Warren Buffett doesn't rush. In fact, speed is usually a warning sign in his world. When investors move fast, it often means fear is involved. But when Buffett adjusts slowly, it means something deeper is happening. Not panic, not prediction, re-evaluation. This is where most people get confused. Reducing exposure doesn't mean markets are crashing, the economy is ending, everything is over. It means risk is being priced more carefully. Buffett isn't trying to time the market, he's adjusting the weight of certainty. Whenever Buffett revisits a position, he asks one simple question: is this business still as predictable as it once was? Predictability is the foundation of long-term investing. If future cash flows become harder to see, Buffett doesn't argue with reality, he respects it. Not overnight, no single event, but layers of complexity slowly built up. Global uncertainty, shifting demand, tighter margins, regulatory noise. None of these alone are fatal, but together they reduce clarity, and clarity is Buffett's favorite asset. Retail investors wait for drama. Buffett watches for friction, small inefficiencies, rising uncertainty, business models that need everything to go right. When businesses lose margin for error, Buffett notices, even if the market doesn't. Buffett doesn't need certainty, he needs favorable odds. If probabilities shift from very likely to maybe, that's enough for him to reduce exposure. Because investing isn't about being right, it's about avoiding being wrong. Let's be clear, Buffett is not predicting recessions, crashes, or short-term movements. He's doing something far more boring. He's simplifying, reducing complexity, reducing fragile assumptions, reducing dependence on perfect outcomes. Many businesses today look strong only because conditions are ideal. Cheap capital, stable demand, global efficiency. But what happens when conditions normalize? Buffett doesn't invest in perfection, he invests in resilience. Boring businesses survive uncertainty, adapt slowly but steadily, don't rely on trends. Exciting businesses need momentum, boring businesses need discipline. Buffett has always chosen discipline. Smart money isn't running away, it's rotating towards simplicity, domestic demand, strong balance sheets, predictable earnings, away from complexity, leverage, narrative-driven growth. This isn't fear, it's maturity. Look back at every major period of uncertainty. Buffett didn't disappear, he became selective, he waited, and when clarity returned, he acted decisively. Patience isn't inactivity, it's preparation. If you're watching this and feeling uneasy, pause. Ask yourself, do I understand the businesses I own? Do they require perfect conditions? Can they survive change? If yes, stay calm. If no, headlines aren't the problem, your assumptions are. They confuse movement with intelligence. Doing nothing feels wrong, but sometimes doing nothing is the smartest decision. Buffett has said it himself. The stock market is a device for transferring money from the impatient to the patient. This quiet reduction isn't a warning, it's a reminder. Markets don't reward speed, they reward judgment. They don't reward excitement, they reward endurance. Warren Buffett doesn't chase the future, he prepares for it. And while the world reacts loudly, he adjusts quietly. That difference is why his approach still works decade after decade. If you want to invest the Buffett way, learn to listen to silence, because that's where smart money speaks. Quiet moves, clear thinking, long-term wealth. That's the Buffett way.